Morning, Steve Free in Chicago with the morning grain comments. Prices of grains are higher overnight and it will keep marching on and adding risk premium to the marketplace. Soybeans are kind of leading the way with corn and wheat following. We continue to be concerned about South American weather and the La Nina impact it could have on southern Brazil and Argentina, and lower crops there could add for the demand for U.S. Soybean meal, soybean oil, and corn demand. We also note that there are no wheat offers for Russian exports for the month of February forward, and that lack of exports plus reduced export demand, ex-supplies out of Europe, could actually support wheat prices. We'll be watching pretty closely the relationship between beans, corn, and wheat as far as 2021 U.S. planted acres are concerned. But corn, I think, needs to follow beans to make sure that it gets an increase in acres that we need. And there is talk that spring wheat farmers in the U.S. may be switching from intended spring wheat acres to corn and soybeans because of the price relationships. We note that Motif corn and wheat are making new highs. Palm oil at 10-year highs. We've got our markets making new highs. We've got Panamax vessel freight making 4-month highs, 3-year lows in the dollar, 1-year higher in crude oil. And all this is bringing new money into the market. Managed futures are record long. The grain complex index funds are adding to their record longs, and new money may be coming in part because of the supply concerns globally, but also maybe a hint of inflation down the road, and maybe actually interest rates start going up, which could increase prices. Also, we're looking at a post-virus vaccine. A successful vaccine could increase demand for raw materials, especially food and fuel. So all these things are pushing prices higher. I think we did see a few people talking about a U.S. soybean carryout below 100 million bushels. That could trade us in the soybean complex even higher. We do note that the CME added margin requirements for beans, meal, oil, wheat, oats, hogs, and so we'll be watching that pretty closely, but I don't think that reduces the volume or the open interest. On January 13th, we'll be having our annual broker meeting starting at 3:15. That day we'll see an outlook for ADM and ADM Investor Services. On January 19th, we'll have an outlook by Dan Bossi for the Ag Outlook and David Hightower for the Financial Energies and Other Markets Outlook. I think these are critical meetings for you to understand what the potential risk is and how to manage that risk for you and your clients. Everyone should sign up for this. This is a most critical time to be looking at commodity prices, especially after the sharp gains that we've seen in grains since August. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.